It's August 8th, JLD here, and welcome to MSTR today. In this show, we're talking all things strategy, all things MSTR, all things Michael Saylor. It's going to be a great episode, but nothing will be financial advice. Please hit that like button. Thank you for supporting the channel, and let's dive right into a Michael Saylor quote, which I absolutely love. But I first want to give it a little preface from Chris. Real estate investors raise capital to buy more physical property. Strategy raises capital to buy more digital property. Do you understand? And then the Michael Saylor quote is, every time Manhattan real estate goes up in value, they issue more debt, develop more real estate. That's why your buildings are so tall in New York City. It's been going on for 350 years. I would call it an economy. And he's just trying to draw the comparison between physical real estate and digital real estate, which of course in the form of Bitcoin is scarce at 21 million. Then you have Chris, who says, I'm old enough to remember when I had more Bitcoin than Saylor and Strategy combined. And I just had to chuckle at this because I clearly remember buying Bitcoin back in 2018. And guess what? At that moment in time, and actually for the next 2 years, I had more Bitcoin than Michael Saylor. I had more Bitcoin than Strategy combined. Of course, that changed pretty quick, but pretty crazy to think about. Jeff Walton says, digital risk is better than physical risk. Magnetic attraction to the risk-free rate. And Bo wants to say hello. He's having a little breakfast right now. But this is in response to Frank saying, stretch is our iPhone moment. And of course, this is the price of Bitcoin as it's kind of chopping up from 100,000 down to 75,000, then back up to about 100. And where's that now, which is like 116,000. But then this is when Strike, Strife, Stride, and Stretch were launched. And you can see what their yields were. Right now, Strike's at about 7 and change. Strife is 8 and change. Stretch is about 9 and change, and Stride's closing in on 12%. And then you can see right below it in purple, this is actually the risk-free rate, which of course is what you can get from the government. And then of course, Jeff put a little magnet down here because all of this is going to be pulled downwards. So of course you can lock these in now, especially with Stride, Strife, and Strike. Stretch will be variable, but Stride, Strike, and Strife will not be variable. You lock in, let's say, $10 per share for Strife and for Stride, and $8 per share for Strike. And then as the interest rates are dropped, which is coming this September and going forward, you will see these yields will go down for people that are buying after you buy. Because it's going to get pulled down towards the risk-free rate. Like probably not all the way down, and it'll be slowly and gradually over time, but it'll be down to 7%, 6%, 5%, and so on and so forth. That's the magnets. And then I thought this was a great next post by Strategy, and talks about how Strategy securitizes Bitcoin for different pools of capital. So MSTR is amplified Bitcoin. Stride is for long duration, high yields. And then Strike is structured Bitcoin. And Strife, let me wait for it. Strife is long duration senior credit. It's going to be their golden goose for all time. There's going to be so much capital below Strife in the capital stack. It's going to be ridiculous. But what's even more important is there's going to be so little capital above Strife. In fact, there's probably going to be next to nothing in a couple of years as they let the convertible bonds or as they pay off the convertible bonds or roll the convertible bonds off the balance sheet, et cetera. So exciting times. Stride, long duration, high yield. Stretch, short duration, high yield. MSTR amplified. Strike, structured. And Strife is long duration. One more time. Strife, senior credit. Boom. Let's go. Dan says, may have been sleeping during MSTR True North, but Stretch was doing the thing where it goes up every single day. And that's why I bought it $89, because I knew that it wasn't going to be immediate, but it would be over time going to 100 and potentially as high as $101 before Michael Saylor and his team stepped in and put a ceiling on that. So I was like, let me take that easy 11%. And by the way, I've done some sleuthing. Some of you probably already know, but as long as you hold on to your stretch until August 16th, you are going to get paid your 9% to 9.5% interest yield. Now, this is not financial advice. This is just what ChatGPT told me. But that is the reason why I plan on holding my stretch until at least August 16th. It's going to be price dependent. But if it goes up to 100 today, I'm still holding until August 16th because I want to make sure that I'm also going to be getting the 9%, 9.5% yield that they'll be paying out on August 31st / September 1st. I think September 1st is actually the pay date. But last time when they paid us out for Strife, it was a couple days early. So we'll probably get paid or possibly get paid sometime in the end of August, like August 31st, depending on what day of the week that is. But my point of all of this is I am definitely holding on to stretch until two things have to happen. Number one, it has to get to at least 100. And then number two, it has to be at least August 16th or later. So when both of those conditions are met, I do plan on rotating out of stretch into potentially Stride is kind of where I'm thinking now because it's close to 12%. I'm just hoping that Stride doesn't have a little run up over the next week or so. Because man, that's an appealing, that's an appealing yield. 12%. Are you kidding me? Michael Saylor, you're doing amazing things here, letting me do some cool things with my cash. Thank you. And of course, all my investable assets are pretty much being dumped directly into MSTR for obvious reasons. Chris says, strategy is literally revolutionizing the capital markets, yet spent only $24 million on R&D in Q2 of 2025. That's 0.24% of the $10 billion net income it posted. This is the definition of efficiency. Incredible business model. And again, that's why I just say sit back and let Saylor cook, let Fong Lee cook, let the strategy team cook, because they are doing amazing things for you, for me, for the MSTR equity shareholders every single day. And it is just a pleasure to be a part of this. And then Chris wants us to remember the best is yet to come. And just a nice little day here of a $402 posting with an $18 increase and just under a 5% increase for MSTR yesterday, which was amazing. Of course, it was in response to the run up on Bitcoin. And it's just, it's great to know at this point that strategy and Michael Saylor are just going to let MSTR run. They're going to let it run all the way to $600. And that's when the 2.5 MNAV hits. And then they'll do strategic MNAV from 2.5 to 4, and then aggressive, not MNAV. They'll do strategic ATM from 2.5 to 4, and then aggressive ATM 4 and above. So it's just great to have guidance there, so we just don't get all those annoying people on the internet saying how Michael Saylor is hitting the ATM. Like they would have been like, oh, look, Michael Saylor is hitting the ATM right here when it's dropping down. Like, no, he wasn't. Bitcoin was having a little correction, and MSTR was also as well. Because what is MSTR? Amplified Bitcoin. Say it with me for all of you bears out there. Amplified Bitcoin. Amplified Bitcoin. And now I'm going to let Michael Saylor talk because I have some great video clips. So Michael Saylor, sit back and enjoy.
Plan to hodl through all the cycles, and weather those, whatever 80% downturns when the crypto markets are in a bear market.
Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset, and I don't think you can quote unquote take money off the table. You're speaking like a crypto trader right now, right? Yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. So when you say things like that to me, and maybe you just do it just to see what I'll say back, I just imagine you preaching to me in Argentina while you're asking me if I'm going to sell the dollars and buy pesos back again as the peso sleeps from 20 to the dollar to 40 to the dollar to 80 to the dollar. Or if we're in, Venezuela. I mean, you think of Venezuelan company is going to, like, quote unquote, take some money off the table by selling their US stocks and their US dollars to buy back into local currencies? Or then, in Zimbabwe, you think they would take money off the table, right? Like, the point is, if you have the superior asset, it's going up forever, Laura.
PayPal just made it official. They're letting US merchants accept Bitcoin. That's not just a news story, it's a sign of where things are going, and it raises a critical question. If the world is shifting toward Bitcoin, are you doing enough to participate? Because here's a powerful way to go further. Convert an old 401k or IRA into a crypto IRA with the help of Bit IRA. Bit IRA will help you convert it free of taxes or penalties. And here's why you'll love them. End-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. And it's fully IRS compliant. Best of all, you can trade crypto within your retirement account without taxes incurred on any buys or sells. If you already put money into an IRA or employer sponsor 401k on a regular basis, why not invest into a Bitcoin IRA each month? Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Again, that's bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
And God says, okay, I've decided to solve your problem. I'm going to run a bank in heaven. I'm going to issue 21 million God coins, and they're infinitely dividable. And I'm just going to go ahead and do this for you for just about nothing. And you can telepathically move the coins between each other to pay off your debts. And I'm going to make sure that no bank, no government, no counterparty, no country, no criminal takes your money away from you. And I promise never to inflate it. I'm just going to, so there's your money. There's your bank. It's a bank in heaven. Right. And a person can hold a gun to your head, but you've got the money in your head, and the angels will, protect you. They might murder you, but they're not getting your money. So if I thought about that, I'm thinking, okay, God is going to run an honest bank for me. Okay, good. That's probably good. But in the absence of God offering to run the bank, and protect your property rights forever from everybody, the next best idea is we create a piece of software using cryptography, and then the software instantiates in the protocol 21 million coins subdividable by 100 million, so 2.1 quadrillion satoshis. Effectively enough. You could subdivide it more if you needed to. We create that system, and now you can send 1,000, 100, a million, a billion, 10 billion, $100 billion worth of that from anybody to anybody without asking anybody's permission using a computer. You can hold $1 million in your head, $1 billion in your head. You can hold it in your hand. If you know you're going to get arrested, you can just zap it to your sister in Singapore. If you don't trust the bank in New York, you can put it with the bank in London. Right. And if you don't trust any bank, you self-custody. We're a Bitcoin treasury company. We're powered by a Bitcoin reactor. We've got $35 billion of Bitcoin, and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week, we did a convertible bond. $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share. But over 10 years, that's $125 a share to the shareholders. I think that the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company. What's the second best? There is no second best.